Silver is not cheap gold. The most expensive misunderstanding in investing. There is noise in the market. Jewelry shops are crowded. Every second video on social media is saying, gold has become expensive, now buy silver. Prices are making new records every day, and it feels like anyone who doesn't buy now will miss the opportunity. This is where fear is born. Will I be left behind? And this is where curiosity begins. Can silver really do what gold has been doing for centuries? Or are we all trusting a story whose ending has often been painful? The recent surge in silver prices has changed the thinking of ordinary investors. As gold prices started touching the sky, many people began seeing silver as cheap gold. That is why, despite record inflation, demand for silver coins, bars, and jewelry has risen sharply. But commodity experts are warning in one voice. Treating silver as an alternative to gold is a dangerous illusion. In the world of investment, the story, nature, and risk of these two are completely different. First, it is important to break the myth that silver is the younger brother of gold. Experienced players in the bullion market say that even though gold and silver belong to the same family, they are not alike. Gold has behaved like a global currency for centuries. When inflation rises, interest rates move up or down, currencies weaken, or geopolitical tensions deepen, investors instinctively rush toward gold. That is why central banks around the world are aggressively buying gold today. It is not just an investment, but a symbol of trust. Silver's story diverges from here. Silver has a dual identity. On one hand, it can sometimes act like a monetary hedge, but on the other, it is also a heavy industrial metal. This means its price does not move only on fear and uncertainty. It is deeply linked to factories, machines, and manufacturing. As soon as economic activity picks up, silver demand rises and prices go up. But the moment the economy slows down, silver is the first to get hit. This is the point where retail investors often go wrong. Many people believe that just as gold stays safe during global crises, silver will also provide protection. History does not support this thinking. Gold has repeatedly proven that during wars, financial crises, and policy uncertainty, it holds its value and often becomes stronger. Silver does not behave like that. Around 50 to 60% of annual silver demand comes from industrial use, such as solar energy, electronics, batteries, and electric vehicles. That means if global manufacturing slows, silver prices come under direct pressure. This is where silver's real weakness shows. It is extremely sensitive to global economic cycles. When the world expects growth, silver shines. But when fears of recession emerge, the same silver falls much faster than gold. That is why calling it a safe haven often turns out to be wrong. If we open the history books, silver's story becomes even more frightening. The year 1980 stands as a warning for investors. At that time, silver prices suddenly shot through the roof. The reason was reportedly the game played by the Hunt brothers. During that period, the Hunt brothers had cornered nearly one-third of the world's total silver supply. The market felt like silver would never fall. Investor excitement was at its peak. But then the story suddenly turned. Exchanges tightened margin rules. Liquidity dried up. Those who had bought silver using borrowed money were forced to close their positions. As a result, silver prices crashed from around $49 per ounce to nearly $11. For those who bought at the top, it was devastation. Dreams were shattered overnight. This was not a one-time event. In 2011, history repeated itself. Silver once again climbed to around $48 per ounce. There was talk everywhere that silver would now overtake gold. But within a few months, prices fell by nearly 75%. Investors who had bought it believing it to be cheap gold suffered heavy losses. That is why today, when silver is once again running fast, experienced market experts are advising caution. They say that the sharper silver's rally is, the more brutal its fall can be. This metal moves more on cycles than on emotions. Now, if we compare the nature of gold and silver, the difference becomes even clearer. Gold remains relatively stable over time. There are ups and downs, but not as sharp as silver. During crises, gold becomes a shelter for investors. Be it inflation, a weak currency, or geopolitical tension, gold acts as protection. A large part of its demand comes from investors and central banks who hold it for the long term. Silver is the opposite. Its volatility is much higher. During crises, it can fall even more than gold. If industrial growth slows, its prices are directly affected. A large part of its demand comes from factories and industry, which changes with economic conditions. That is why silver is considered a riskier investment by nature. There is also a psychological aspect here. Because silver is cheaper, retail investors see it as affordable. They feel that getting more units for less money means higher profit. But in investing, the number of units does not matter. The behavior of the asset does. Comparing 10 grams of gold with 1 kilogram of silver only on the basis of price is a big mistake. In today's world, Gold's role has become even stronger. Efforts are underway to reduce dependence on the dollar. Many countries are increasing gold in their reserves. This is a systematic trend. Silver does not enjoy this kind of support. Its prices are driven mostly by market demand and supply, not by monetary policy. This does not mean investing in silver is completely wrong, but it is important to see it in the right context. Silver is for investors who can take higher risk and who want to bet on economic growth. If industry grows rapidly and green energy and electric vehicles expand, silver can deliver excellent returns. But this journey is not smooth. There are big shocks along the way. For long-term investors seeking stability and safety, gold is still considered the better option. Its volatility is lower. Its risk-reward balance is more stable. It has proven itself again and again against inflation, geopolitical risk, and currency weakness. Compared to this, silver is a more aggressive asset, with higher return potential but also a higher risk of loss. This is the bitter truth that often gets buried under market noise. When prices go up, every asset looks good. The real test comes when the market turns. Gold has passed that test many times. Silver has failed it many times as well. So if you are also preparing to invest in silver thinking of it as cheap gold, pause for a moment. Ask yourself, can you handle the volatility? Can you hold on to your investment even after seeing a 30 to 40% fall? If the answer is yes, silver can be a small part of your portfolio. But if you want safety and stability, gold remains just as relevant today. In the world of investing, the most expensive mistake is often the one that looks the easiest. Treating silver as cheap gold is one such mistake. Both shine, yes, but their fire is different. And the investors who understand this difference are the ones who survive in the long run.
If our video has taught you something new, do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestions. And yes, if you like our content, subscribe to the channel and press the bell icon so that you stay connected with every new story. Thank you. GRT Business YouTube channel sources: news from various news agencies, opinion polls, and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.